NIO stock finished the week in a surprisingly calm fashion. After all the turbulence we saw over the past few sessions, the equity raise announcement, the sharp drop, the rebound, and the fight to hold the $6 line, the stock ended the aftermarket session on Friday essentially flat, down just 1 cent. On the surface, that might not sound like much. But when you zoom out and think about what this week meant for the company, finishing steady could be more significant than it looks. It raises the question, is this the calm before the storm, the moment of consolidation before NIO's next big move? That's the angle I want to explore in this weekend update. Let's first revisit what happened this week, because it really sets the stage for understanding why Friday's flat aftermarket trading matters. On Wednesday, NIO announced a major equity raise. The company will issue 182 million new shares, with underwriters having the option to buy another 27 million. These shares were priced at a steep discount, about 11% below Tuesday's close at $6.28. That news sent shockwaves through the market. NIO stock plunged almost 9% in a single day, on huge volume. More than 230 million shares traded hands, nearly 3 times the average. For investors, it was a gut punch. Dilution is never welcome, and doing it at a discount feels even worse. But Thursday told a different story. After the dust settled, the stock bounced 6% to close at $6.07. Buyers stepped in around that critical $6 level, treating it like a line in the sand. Friday built on that momentum, with the stock climbing another 2.5% to finish the regular session at $6.22. And then came the aftermarket session, flat, down just a penny, holding steady right above $6.20. Why is that important? Because it shows the market is digesting the news. Instead of more panic selling or another sharp drop, the stock is consolidating. Investors are absorbing the dilution story, weighing the risks and opportunities, and finding balance around that $6 zone. That's a sign of stabilization. And in markets, stability often precedes the next big move. Some of this stabilization comes down to technicals. $6 is now the most obvious support level on the chart. We've tested it multiple times in the past week, and each time, buyers have defended it. Technical traders look for these patterns, and once they become established, they tend to reinforce themselves. The longer NIO holds above 6, the stronger that support becomes. On the upside, the next resistance zone is around 650 to 670. If the stock can break through that level with conviction, momentum could carry it towards $7. But beyond technicals, there's a fundamental story that explains why investors are willing to defend this level. NIO's deliveries are strong. August saw a record 31,305 vehicles delivered, up 55% from a year earlier. In the second quarter, deliveries reached 72,000, up 26% year over year. Financially, revenue came in at $2.7 billion, losses narrowed to $567 million, and gross margins improved to 10%. Those are not the numbers of a company in free fall. They're the numbers of a company that is growing, even if profitability is still out of reach. The equity raise, painful as it was, actually strengthens the long-term story. NIO ended Q2 with $3.8 billion in cash, but it's burning about $1.6 billion this year. By raising another $1 billion, the company is giving itself more runway to invest in research and development, roll out new models, and expand its unique battery swap ecosystem. Management has said the goal is to reach positive free cash flow by 2026. To get there, they need capital. So while dilution hurts today, the hope is that this cash fuels tomorrow's growth. This is where investor psychology gets interesting. On Wednesday, fear ruled the market. Dilution equals bad news, so people sold. On Thursday and Friday, logic returned. Investors realized that dilution in itself doesn't mean the company is failing. In fact, it means management is planning ahead, making sure they have the resources to compete in a brutally competitive market. That shift in sentiment, from panic to cautious optimism, is reflected in the price action. And Friday's flat aftermarket session tells us the market has found equilibrium, at least for now. Another big factor in this week's movement has been short interest. Nearly 195 million NIO shares are sold short, representing about 12% of the float. That's a large number. After Wednesday's plunge, many short sellers who had bet against NIO were sitting on healthy profits. Closing those positions requires buying shares, which adds upward pressure to the stock. That's part of why we saw Thursday's 6% bounce and Friday's 2.5% gain. By the time we got to the aftermarket, a lot of that short covering had played out. The result, a flat session, where the tug-of-war between buyers and sellers ended in a stalemate. So what does this all mean for the weekend outlook? In my view, it means NIO is consolidating. The equity raise news has been priced in. Short covering has played its part. And now the stock is hovering around 620, waiting for the next catalyst. That's what makes this weekend so interesting. The calm we're seeing could be the pause before the next significant move, whether it's up or down. Looking ahead, there are several catalysts on the horizon. The most immediate is NIO Day 2025, scheduled for September 20th in Hangzhou. This annual event is NIO's showcase, where the company unveils new models, announces brand updates, and highlights its technology roadmap. This year, the centerpiece is expected to be the third-generation ES8, a flagship SUV that could redefine NIO's position in the premium EV segment. Updates on the Onvo sub-brand, which targets the family SUV market, and the Firefly brand, aimed at compact EV buyers, are also expected. On top of that, investors will be watching closely for announcements about the expansion of the battery swap network. If NIO delivers strong news at NIO Day, it could spark a fresh wave of optimism and push the stock higher. Another catalyst is delivery data. September numbers will confirm whether NIO is on track for its Q3 guidance of around 89,000 deliveries. If they hit that target, it reinforces the growth story. If they miss, it raises new questions about demand and execution. Either way, those numbers will move the stock. Analyst sentiment is another factor to watch. Despite the equity raise, major firms like Citi and Bank of America have maintained buy ratings, with price targets in the $7 to $8 range. If more analysts echo that optimism, it could help shore up confidence. Conversely, if downgrades start coming in, the stock could face renewed pressure. And then, of course, there's the broader EV market. Tesla, BYD, XPeng, Li Auto, and Xiaomi are all cutting prices and fighting for market share in China. Average selling prices for NIO have already fallen from $38,000 last year to around $31,000 today. That puts pressure on margins. Investors will be watching to see if NIO can maintain growth while navigating these price wars. The risks are real. Dilution means shareholders now own a smaller piece of the company. Price wars mean profitability is still elusive. Macro headwinds in China, slowing economic growth, weaker consumer demand, fading subsidies, all add uncertainty. But Friday's flat aftermarket session tells us that investors are willing to look past those risks, at least for the moment. They see the $6 floor holding, they see strong delivery numbers, and they see catalysts ahead. So here's the big takeaway: the market has stabilized after a wild week. The $6 mark is proving to be a floor. Short covering has provided a cushion. And now, with NIO trading flat in the aftermarket, the stage is set for the next big move. Whether that move is driven by NIO Day, delivery numbers, or analyst commentary, it will be decisive. For investors, this is the calm before the storm. In conclusion, NIO stock ended the week at $6.22, finishing the aftermarket session flat, down just a penny. After a week of fear, rebounds, and technical battles, the market has found equilibrium. The equity raise is priced in, short covering has eased, and the $6 floor is holding. The question now is what comes next. Will NIO break out above resistance and climb towards $7 on the back of NIO Day and strong deliveries? Or will volatility return as risks resurface? We'll find out soon enough. For now, the calm we're seeing might just be the setup for NIO's next big move. As always, this isn't financial advice. Do your own research, weigh the risks, and decide how NIO fits into your investment strategy. But keep an eye on the signals. The calm we're seeing now may not last long. And when NIO moves again, it could move quickly.